Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great weekend. I'm going to give you guys a quick breakdown of everything that happened last week and what we're expecting for this week. Before I get right into it, I'm going to do a quick dad joke. Dad joke today is, where does Santa Claus keeps his red suit, his Christmas suit? In the closet. Get it? In the closet. Pew pew. All right. So getting right into it. Let me share my screen so I can show you some information. But one of the things that we got last week was that the Fed decided to cut rates by 25 basis points. Now I kind of basically led you guys up to this knowing that we had a 70% chance of this happening. And sure enough, it did actually happen. The Fed rate went from 3.875 to 3.625. So that's a really probably as expected, especially with what we saw with all the the employment reports outside of the unemployment rate that we missed in the last 2 months. This was all expected. Inflation's gone down to a lower level by quite a bit in the last 2 years. We are seeing the levels of the labor market continue to weakening. So even without having the BLS unemployment rate for basically October and November, we had all the other ancillary reports of the employment rates showing that there was a lot of weakness. So the Fed initially was like, we're not going to get these reports, or at least an updated one, until maybe after December. But they realized all the other reports showed that, yeah, where our labor market is getting a lot weaker. So that's one of the reasons why they decided to lower the Fed funds rate by 25 basis points or 0.25%. So this is a good sign. This was expected. I wasn't really, I wasn't really expecting anything else, like, unless they were not going to change it at all. But what's really nice is that rates actually improved a little bit on the day they did this. Now, what's really important about why I bring this up is because over the last 5 rate cuts they did, the first being 50 and the next 4 were, just 0.25%. Rates actually moved up. If you looked at the last, 3, the one in September and the one in October, we can see whenever they lowered the Fed funds rate by 25 basis points, the mortgage rates actually went up in all these instances. This time, mortgage rates actually improved because of the response of what they were seeing. So that's a really good sign. We hope that, the report that we get tomorrow, and it continues to improve on these numbers as well, which I'll go into more in a little bit. Also, in addition to that, last week we got something called a JOLTS report. This JOLTS report tells us about the job opening postings that existed during the time of September and October. They combined the report, in this case last week, between September and October, and the combined number is up to 7.6 million people. 7.66 million postings. Now, to be very clear, what a JOLTS is basically what are the number of job opening postings that are out there. The tough thing about this number is that we talked about in the past, mentioned it in the past, is that this number is very inflated because there are multiple postings for the same job. So, for example, a company may post a remote working gig. Maybe it's a remote project manager, right? And they may post this in 5 different other states. For example, California, Oklahoma, Texas, and maybe Florida and New York, right? That one job posting, even though it's for the same job, that counts as 5, right? So that's one of the things that is one of the big concerns about this JOLTS report, is that there's inflated reports. So that's the tough thing about this. It's probably not as big as the 7.6 number. It's probably a decent amount less. The other thing that came out last week is the jobless claims. So there's 2 reports in this jobless claim. It's called the initial jobless claims and then the continuous jobless claims. Initial jobless claims is up 44,000. These are the amount of people who file for unemployment benefits for the first time. So that number went up by 44,000. The next thing that came out is the continuing jobless claims. Continuing jobless claims was down 99,000. But the thing about this number is that this is the people who continue to file for unemployment benefits after the initial. So if you're already on the initial and then you file again for unemployment benefits, you're officially now on a continuing jobless claims report. This number was down 99,000. And this was last week for the month of November. the interesting number about this is that, so this is a weekly report. So it came out last week, right? Which is a week behind. And the thing about all that's happened in the last couple of weeks is holidays. And what's coming up in next week is another holiday. So there's a chance that a lot of people are pausing their unemployment benefits or didn't file for continuing unemployment benefits because of the holiday. It's an actual thing. So that's something to consider, that it's down 99,000, which is a really big move. And we've been above 1.9 for about 3 to 4 months now. So the fact that it went down that much is most likely because of the holidays. Not that there's a bunch of new people are not filing for unemployment benefits. Now, the big thing that we've always been talking about is December 16th, which is what comes out tomorrow, is the BLS jobs reporting for October, specifically the unemployment rate. So the unemployment rate update that we're going to get tomorrow is going to be a big key factor this week on how mortgage rates are going to trend for a while. Because one of the things that we've been talking about over the last basically year is that the two things that have the biggest impact on mortgage rates is inflation and the unemployment rate. We've already said inflation has moved as much as it can. The big moves have made. There's only small incremental moves down. And now the only other thing that can have a big move is the unemployment rate. So the unemployment rate for October, the one that we missed in November, is going to come out tomorrow. And there's an expectation that it is going to go up to 4.5%. And here's a couple reasons. We've seen all the weak labor market reports that have come through between October, November, even past September, that showed that there's just a lot more people not working. That's a fortunate truth leading up to this report, especially all the weekly reports that we got. In the September unemployment rate we got before basically in middle of November for September, which is our September unemployment rate, showed that the unemployment rate was actually 4.44, and they rounded it down to 4.4, which means that if the unemployment rate for October goes up to 4.45, it's rounded up to 4.5. So if we get this October report showing that it goes to 4.45, that's all we need to see 4.5 showing the unemployment rate going up, which will be positive, which would move rates most likely in the more positive direction by coming down. So that's going to be a really big report this week specifically. There's some other reports that are going to go down this week, but for the most part, this is probably the biggest news. And we're hoping, everything logically points out that it should go up. However, there's a chance that it goes in completely opposite direction. We don't know, but with everything that we know that happened in October, government shutdown, furloughs, there was a number of layoffs, thousands of layoffs in October. There's every reason for it to go up, at least 0.01%. That's all we need. 0.01% for it to go to 4.5. That's it. So that's all we're waiting on. That's all we're hinging on. Hopefully we get that number, and I have a lot of files I need to log tomorrow too. All right. Now, what's really cool about over the last couple weeks, the report came out that the county loan limits have gone up for FHFA. FHFA announces when the county loan limits go up every year around this time, usually right middle the November to like the first week of December. They announced that the county loan limits went up. So to give you guys an example, 2025, the baseline for all the counties is 806,500. And unless you're in a high cost county, it would go up to 1.209 million, by the way. Now there are counties who have county loan limits in between this. Like for example, Pierce County, Washington isn't at the high cost, but it is in the upper echelon. It's around probably a little over a million at this point. It was 1.089 last year. Now it's probably closer to like 1.1. So that's an example of how that goes up. So high cost counties, they went up by $30,000 to $90,000 if you kind of think about it. Baseline is at $832,750 this year, and the high cost counties went up to 1.299. So all the other counties that have numbers between that will scale up with these higher county loan limits. What does this mean for a lot of VA buyers? Again, this doesn't really necessarily matter to VA buyers who are only going to have one VA loan at one time, right? Because they're not going to have a limit. It only matters to those who have what's called partial entitlement, which means they'll have about $30,000 to $90,000 more in their VA entitlement going into 2026, closing in 2026. So that's what's really exciting about the new county loan limits, is that they went up a decent amount. It's pretty good. The other thing for changes for 2026 is that BH and VA disability went up. BH went up about 4.2% across the board, but be careful. This is a national average. Sometimes, I think a couple years ago, specifically Kitsap County, there's some ranks and below, like E6 and below, in that specific county where the BH actually went down. But in that county, E7 and above, it went up. So be sure if you are in a big military town, verify your local county's BH specific zip code. There's a whole website for this. Make sure you're looking at a DOD.gov website for these BH rates. And also VA disability went up about 2.8%. So this is anyone who has 10% or more on their VA disability. Their amount actually went up by 3%, which is pretty good. So that's pretty consistent with what we've seen in the past. So that was a lot of news. Sorry guys, this was a long one, but I wanted to make sure you guys get all the info. So if you guys have any questions, let me know. Be happy to chat. Otherwise, nuke out.